no one actually talks about how to decide what ETF is the best option for you and how to compare ETFs and index funds together. So that's what I want to show you in this video. And it's going to be a little bit different than usually because we're actually going to go into my computer and I'm going to show you the tool that I use to compare my ETFs and exactly how to do it and what things to look at when you are deciding. So let me introduce to you the ETF comparison tool. This tool is inside my membership Rich Girl Academy, in which you'll learn everything that there is about investing, passive investing, money, building a business, and all of the good stuff regarding money. And if you're interested in checking that out, the link for a 7-day free trial is in the description. Basically, what this tool provides is an overview of all the factors that you want to look at when you are comparing 2 or 3 or more ETFs. And it also flags, so it turns into a specific color when something is a little bit off. So for example, if the expense ratio would be, let's say 0.5%, you can see that it is turning a little bit yellow because there is caution and you need to review before deciding. So it's very convenient because not only does it allow you to compare, it also actually shows you when things are off. Now, if you don't have access to this tool, you can of course take a screenshot here because you can still use these factors that we're going to look at. I would recommend getting the actual tool because of course this one also flags for you if something isn't great, but if that's just not where you are at right now, then make sure to take a screenshot of these so that you can still use them to compare your ETF. So we're going to fill in this tool together and let's use as an example VWCE, which is the FTSE All-World ETF, as well as IWDA, which is the MSCI All-World. So both of these ETFs are All-World ETFs, but they do track different indexes, which means that they're quite similar, but they're still different. And it's hard to decide which one is better for you. So that's why we're going to use the tool. So I already have these pages open. Now, first, I want to show you how to fill in this entire tool very quickly using Claude, because we could go ahead and fill all of these in manually, but why would we when we can do things faster? And then I will show you how to double check and where to actually find the information manually as well, because obviously Claude can make mistakes. So we're gonna go over to Claude, and the first thing that I'm going to do is I'm going to upload the ETF tool. And then I'm going to tell Claude, please help me fill in this ETF comparison tool. Yes, I do say please to my AI. I want you to fill in all the cells and data that goes with them for the ETFs mentioned. The ticker is at the top per ETF. Then what you want to do is you want to tell it what source to use so that you know that it's using a reputable source and that you can kind of rely on the information. So personally, I like just ETF, which is this website, especially if you invest in UCITS ETFs, which is usually the case if you live in Europe or if you live in some Asian countries where it's also more common to use the European market to invest. But you can also, for example, use something like Morningstar, Yahoo Finance, whatever is more relevant in your region. You tell Claude to actually use that source. So what I'm going to say here is, when filling in the data, please fetch the information from justetf.com. In my case, of course, fill in whatever you like. You could do Morningstar. And then, because I know that the tracking difference is not mentioned on Just ETF, so I like to use this website, trackingdifferences.com. For the tracking difference, you can use trackingdifference.com. And if there is information not mentioned, please mention that it's not available so that I can fill it in manually. Okay, that's all you need to do. And I do realize that I haven't actually given it the version with the tickers because I didn't save this. Here's the 2 ETFs that I want you to fill in. It's better to also not just send the ticker, but maybe also the ISIN or the name of the ETF. So you can find the ISIN here, which is the specific code of a ETF. And I did this the other way around because sometimes tickers can actually differ, and you see that here. This is VWRA, but that's actually the same as VWCE. It just has a different ticker on a different stock exchange. And then we're gonna leave it to do our work for us. Now, while Claude is working on that, let me quickly explain what the different factors mean. Index tracked speaks for itself. It's just the index that is being followed by the ETF. Regional exposure is filling in where the companies inside the ETF or index fund are mostly based. Number of holdings, the amount of companies that are inside the ETF or fund. Expense ratio is the percentage that you are paying in order to have that ETF. It's basically like a management fee that you are paying the issuer of the ETF for creating that ETF for you. Sometimes this is referred to as ongoing charge. Then the tracking difference is the actual gap between the return of the index and the return of the fund. Because obviously the fund is buying the exact same things that are in the index, trying to replicate the same performance as the index, but there will be tiny differences between them. And if that difference is minus, then that means that you're making less money than the actual index is. So you want to make sure that difference isn't too stark. And if there's two ETFs that are following basically the same thing and when the tracking difference of one is less than the other, it might mean that will keep more money in your own pocket. Then fund size in millions is the amount of money that has already been invested in that specific fund. And this tells you something about how popular a specific ETF is, how common it is. And if it's too low, then there is a risk of the ETF closing one day because it is not profitable enough for the issuer, which isn't the worst thing to happen because you do get your money back, but it is annoying because then you have to go reinvest it again. So not the best thing. Fund age, how long it has existed. Domicile is where it is based, and that is important if you are investing in UCITS stocks because it can matter for the taxes that you're paying. Replication method is whether the fund is actually buying the same companies as are inside the index, or if it is replicating it by using contracts with banks, saying that it will get the same returns as those companies, but not really owning the companies. Accumulating or distributing means that in the case of distributing, the dividends that are being paid out by the companies inside the fund are being paid out to you, and accumulating means that they are being reinvested in the ETF. So sometimes this is important because it can trigger taxes if the dividend is being paid out to you. Depends on the location where you live, and if that is the case, then accumulating is preferable. And then we have the dividend yield. This is only relevant if you actually want to live off of your investments right now or in the near future. If you are investing for the long term, then this is not something that I would look at right now. All right, let's go back to Claude, and it has filled in our ETF comparison tool. We do want to double check some of this to see if it is correct, so that's why I have these open here. The TER is 0.2% for the MSCI World, which is correct. Accumulating, physical replication, physical, correct. I just switched the website to English real quick. You can see that the fund size is 124 million. It's off a little bit. That could be because of AI not being 100% updated, but it's still accurate enough. And then for the FTSE All-World, I am doubting whether this is correct, so I'm gonna double check that. Oh, it is actually correct. I thought it would be more. Now I'm actually gonna download it because I cannot see right now whether anything is flagged. Everything is just blue. But here we do see it. So everything is actually green. We have no red flags, which I didn't expect because these are two quite popular and safe ETFs. So we're good either way. We do see that the FTSE All-World is a little bit cheaper. It really doesn't matter. It's 0.01%, but then the tracking difference is also 0.01% less than the MSCI World. Again, that's a neglectable difference. Then we see that the fund size of the MSCI is higher than that of the FTSE. However, do please remember that this number right here is in millions. So you're adding 6 zeros, which means that the fund size is 42 billion for FTSE and 119 billion for MSCI World. And those are two huge numbers. So honestly, again, I would say, yeah, this is not really something that we need to take into consideration because they're both so huge and so safe that we don't really need to. Okay, so when we take these factors into consideration, it is all pretty similar, and there's not really a factor where it's very clear that we should go with one or the other. So then what we're going to look at is the core exposure. We see that the FTSE All-World is a global ETF that has both developed as well as emerging markets, and that the MSCI World is global developed markets only. So it's 23 countries. It does not have emerging countries. We also see that the number of holdings in the FTSE All-World is 3,741, while the iShares MSCI World has 1,300. So now I would base my decision on this, and in this case, if I would have a different emerging markets ETF separately, I would go with the MSCI World because I already have emerging markets. I don't really need to have them in my global ETF as well. But if I want to simplify my ETF and if I want to have a bit of both and I don't have a separate emerging markets ETF, then for sure I would go with the FTSE All World in this case. Also because the number of holdings is a lot more, which means that you are more diversified. You can also obviously choose to be less diversified and go more concentrated. But in this case, I think the FTSE All World is, for my personal situation and for a lot of people who just want a passive portfolio without too many different ETFs and index funds, for most of those people, the FTSE All World would be the best option here. All right, that is how you compare two different ETFs. You can use this tool for as many ETFs as you want. You can also add columns here and insert one so that you can compare even more ETFs with each other. It is completely up to you. And if you want to learn more, I would say check out Rich Girl Academy and check out my channel, because when it comes to building wealth and investing, I share it all and I explain the things that other people don't. Next up, I have a video about my favorite ETFs that are UCITS compliant, so you can invest in them if you are based in Europe or Asia, and I will link it here.